Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, April 21st, 5:07 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what you need to know for next week, and update the world famous 21 over 21 leaders list. Let's dive right into it. State of the market. We're in an uptrend. Still struggling with real estate, particularly commercial real estate, and regional banks, recommending you stay away from there. Check over here at the trend gauge. Leaders had a pretty decent week relative to the indexes. We're still showing neutral there with the green sub arrow. As far as all five of the major indexes go versus our short-term 21-day moving average, all are above there. So we're showing uptrend there. Medium term is a mixed bag. We've got the big cap indexes above their medium term 50-day moving average, mid caps and small caps below. Long term, we've got the three big cap indexes and mid caps above their long term 200-day moving average, small caps lagging there. This has continued to be fallout from the regional bank liquidity mini crisis. So what happened today? Very tight range all day, probably the tightest range of the year, and certainly the tightest week of the year. Just a 1.35% range for the entire week, and we closed mixed. Not a lot of movement whatsoever. Next week, however, is the biggest earnings week of the year. I think about 40% of the S&P will report earnings. So expect some fireworks next week. Here's the close. The final numbers on this lovely Friday are Revere Growth 7, RG7, ETF proxy up 0.22%. S&P 500 spent most of the day slightly red, a little bit of a rally midday, then pulled back up into the close, up about 0.1%. Same with the uh, NASDAQ 100 up 0.1%. Dow Jones Industrial Average, sound familiar? Up about 0.1%. Mid caps down about 0.1%. Russell 2000 up about 0.1%. Boy, that sounds familiar, doesn't it? Global Diversified 60/40 stock and bond down 0.03%, primarily because bonds were weak today. In-house GROTECTION up 0.23%. We'll get to the 21 over 21 list and the rest of the story when we get to the tail of the tape. But first, let's dive into why we do what we do here at Revere Asset Management. So here's the S&P 500. You can see how tight we've been really over the last 3 weeks. And this is the market looking for some direction. Everybody and their brother saying a recession is coming. Will it be a deep recession, a soft landing? Uh, will the Fed, is inflation under control? Nobody knows. We got the Fed coming in 2 weeks. We've got, like I said, earnings next week. You can see the tight range here. Let's go to a 60-minute chart. And I mean, we've gone essentially nowhere the entire month. Uh, we're calling it right now a 6-day consolidation as we've made a higher high and haven't made a lower low. But tight range for 6 days, very tight all week. We introduced the Titan 25 a couple of weeks ago, and I update that every Tuesday. Actually, I look at them every day and update them, but we're going to update them in the video every Tuesday. As long as these 25 stocks hold up, the large cap indexes anyway can't break down. We're not big for investing in the mid and small cap indexes unless they're really on a tear, which they obviously have not been. That's where we tend to do our stock picking, is in the mid and larger small cap area. So there's your S&P 500. NASDAQ 100 has been lagging, but did bounce at the 21-day moving average today. Note the relative weakness over the last 4 weeks, mainly due to semiconductors taking a break. As they led the rally most of the week, they've been lagging, or most of the year, they've been lagging over the past 3 to 4 weeks. Here's the Dow. Tight range consolidation under the 34,000 level, sitting right on its ADMA. Mid caps Get any tighter than that? I don't think so. Staying above the 21 day, which is basically flat now, and above the 200-day moving average, trapped on the upside by the 50-day moving average. IWM looks similar except for where the averages are. Maybe not quite as tight, but hanging right around the 21, below the 50-day, which has crossed through the 200-day now. And you can see that that is basically flatlined. So those are the five major indexes. Let's go to the dollar. Dollar gapped up today, 945. Some uh, economic data came out and it was stronger than expected. The dollar dropped on that. Let's take a look here. Actually, the dollar spiked and then dropped. And same thing with bond prices. They dumped. Let's go right to the TLT. They dumped, didn't recover. And precious metals dumped also. We'll get there in a minute. So back to the dollar. It's continuing to trend lower along this 21-day moving average. Weak dollar, generally good for stocks, but really it's just going sideways. You can look back 3 weeks here. It's going sideways about the same way that um, the market has been going sideways. Let's go to the VIX. VIX had a little bit of a spike yesterday, but down today. This continues to confound people. The VIX is low. I'm seeing people saying you have to go long, you have to buy volatility protection when the VIX is this low. It might spike. We don't anticipate a spike. We really don't try to anticipate anything. We look at what's going on, weigh the odds of what might happen next, what is happening now. We see weakness. We expect that weakness will continue. If it doesn't continue, we recognize that. If something that's strong is getting weaker, we recognize that, and vice versa. Let's go to bonds now, the broad bond index. Outside negative reversal, more volatile than yesterday, which you can see was just a dot here. But look at the 5-minute again, and this was, they gapped up, which meant rates down, and rates rose when we sold off hard at that 945 strong economic data. The market at this point, the conventional wisdom is you don't want to see strong economic data because the Fed will continue to stay tighter for longer, as a bunch of Fed heads have been jawboning this week. Our job's not done. Well, the market's telling you that you've got one raise left, and then you better start cutting by the end of the year. We'll see who wins that battle. Let's go to yields, TNX. This is the 10-year up on the day. You can see the opposite spike on the 5-minute chart. And then TYX, same thing. You got your spike there. Little healthier looking chart on the 30-year than on the 10-year. Let's go to gold and silver, GLD. Undercut closed right below the 21-day moving average for the first time in about 5 weeks. Little change in character there. We sold our gold just above break even. We bought it on the breakout. It really hasn't gone anywhere, and it certainly lagged the S&P 500. GDX, on the other hand, this is where we should have been. We bought gold. Hindsight, gold stocks. Hindsight is always 2020, isn't it? We should have bought gold stocks as they trended nicely higher along the ADMA before taking a break this week. You can see this big handle being put in this very large cup and handle, held the 21-day EMA today. Silver down 0.82. It's taken a break also after a very nice trend up along the ADMA. And Bitcoin, make sure you check out our podcast this weekend. Connor on there talked about how Bitcoin was looking like a short, and it's down 3 straight days now. If you look at a 60-minute chart, we went into this on the podcast, very clear failed breakout. This 18 level corresponds with the 30,000 level in Bitcoin, and it's failed breakout, plain and simple. You can't say, well, Bitcoin looks great, because it doesn't look great anymore. It's a failed breakout. And when you fail a breakout, from failed moves come fast moves in the opposite direction, and that's what you're seeing there. So those are the major indexes. Let's get to the tail of the tape here. You can pause this. The stochastics are mixed on the indexes and on the RG7. NASI RSI continues to be favorable. We're on the bull case. There's the news at 9:45 a.m. It was PMI showed expansion, bonds dropped. 6-day consolidation here. ADMA has closed basically right on, or the S&P 500 has closed right on the ADMA for 2 days in a row, but 20 consecutive days above the 21E. With that economic data showing expansion, the odds of a 25 basis point hike raised by 4% to an 88% chance in the Fed meeting that comes up in 2 weeks. Our expectations remain positive as long as we're above the 21-day moving average on the NASDAQ and the S&P 500 confirm that we are. We're staying within these ranges as we continue to trade tightly. You know what happens from tight ranges. Eventually, you're going to break one way or the other. We've got a plan for either one. So strong today. It was mostly defensive sectors, staples, utilities, healthcare, and consumer discretionary because Amazon was up as they're cutting uh, costs at Whole Foods. Biotech strong also. On the downside, gold and silver stocks, semiconductors continue to lag. Oils, regional banks, and base metal miners. So what we did today, we talked about, already mentioned, we sold gold. We added more to ONOM. That continues to act fantastic. And we bought SOXS, small position. This is short semiconductors. We're holding on to our NVIDIA as long as that holds the 21 EMA. But we recognize, and I broke it down in detail last night, how weak the semiconductors have been. Bottom line, mixed close today to the tightest week of the year, very tight range today, also less than 1%. SPX ATR is at the low of the year at 1.23%. It was almost double this during the bear market last year. So we've got our very clear levels above to look at for next week. This 41.55 level, which is the 50% fib of the entire 2022 bear market. We cannot get above there and stay above there. And then above that, 41.90 and 41.99. 41.90 is 20% off of the 1013 low. We actually eclipsed this intraday when we made the highs of this rebound on February 2nd right here. We're actually up 20.1%, but closed by the end of the day under 20%. The markets just know these levels and they react to them. There's all kind of algos running based on historical precedent, and just like very often you bottom right at a 20% on the bear market. In this case, we topped at a 20% rally off of the bear market low. So that's the key level for next week, is that 41.55 and then 41.90 and 41.99. We really want to get above 4,200, break out of this tight range that we've been in for weeks, and we've got the major big caps reporting next week: Amazon, Microsoft, Google, and Apple, all reporting next week. Expect some fireworks off that. On the downside, the 21 EMA continues to trickle up. It's at 40.93 now. That's the level on the downside that we want to pay attention to. All right, let's get to the 21 over 21 list now, and let's start off with what we eliminated. And there were 3 that didn't make the cut. Palo Alto, we had big hopes for this, but it's just really, look at the relative strength line. Once you gap up, we'll give you a little bit of a break here to rest. But once this bounced off the 21, it should have went higher. It didn't. It paused at the ever popular Livermore 200 level twice and failed, then started to pull back and got to where it's actually showing relative weakness versus the S&P 500, finally closing below the 21. It should have acted like FTNT, with the going sideways, bounce as it consolidates, and then goes higher. We picked Palo Alto. Fortinet is the one that moved. Hindsight, again, always being 2020. So Palo Alto booted out. SE breaking below the 21. Another one with disappointing reaction after earnings, rode the ADMA higher for a little bit, got a downgrade this week, and sold off. And Rambus, We booted. We sold our position on semiconductor weakness. I talked about that in last night's video. And we don't want two semiconductors in here if the sector is lagging. So we still have NVIDIA, which we own, and we're keeping an eye on. I mean, we had some great hopes for this. Look at the 4 volume spikes on Rambus, but one of them was a negative reversal. This one looked like this is when we added to it, frankly. And this was the start of a big 2-day move, but it's a bit on the thin side, hard to get in and out of. We cut it. And as I said, we went short semiconductors today. So those are the 3 that got punted. The 3 new ones, IoT, very nice action in a new name. Mobileye coming back on here. A lot of controversy around this stock relative to, first of all, it trades very choppy. It's a spinoff from Intel, and there's a big lockup next week coming 6 months after the IPO is going to freeze up a bunch of shares. So I'm not buying it because of that, but I want to keep it on this list here as something to monitor, as it could be a barometer for tech strength. If it reports earnings next week and we pass the 6-month period and nothing really negative happens, uh, and it breaks out, it certainly has leadership potential just from a fundamental standpoint. So we want to take a look at it. DraftKings, oldie but a goodie. We played this for some nice numbers back in 2020 after COVID. It formed a very long correction, now forming a nice base with relative strength at its new high, back on the list. The rest of this 18 are carryover from last week. ITB, home builders continue to confound the critics, showing extreme relative strength. Ferrari pulled back, bounced off the 21. FedEx continues to really not show much progress, but there is insider buying, and it's acting fine. It's also a proxy for the transports. Mondelez, uh, Staples had a good week. In fact, one of the strongest sectors on the weekend. It got a boost with Procter and Gamble today. Mondelez looking great. They have earnings next week. GDX, we're keeping this on here. First test after this nice run on gold stocks. Can it hold the 21? We know GLD broke the 21 today. ExxonMobil holding up the best of the oils, just going tight sideways for 4 weeks now since the OPEC production cut. Lululemon. This is one of our, well, we've got 3 stocks left. They're all between 6 and 7.5%. Lulu's a 6% position, as it looks like it wants to ride the ADMA higher, and we're okay with that. ELF continues to just blast higher. ONON, our largest position, added a percent to it today. New closing highs. CDNS bounced off the 21. PagerDuty continues to chop around, lower volume pullback. Wingstop restaurant showed some strength today, this week, and Wingstop was among them. Meta bounced off the 21. GE Healthcare bounced off the 8 last week. What a ride that has been. Earnings next week. Axon continues to ride the 21 higher. Lantheus riding the 8 very strong. NVIDIA, the third stock that we own, continues to bounce off the 21. And finally, GE bounced off the 8 close to the 21 last week and had a great week this week. Earnings next week. And that's your 21 over 21 leaders list. Remember, what we do at Revere is protect the downside. We don't want any of our clients approaching retirement to get hit with a negative sequence of return scenario like happened in 2000, 2002, 2007, 2009, COVID, and last year. Our job is protect the downside, participate in the market upside when the market gets back to a healthy trend, which the market is trying to do despite the Fed's best efforts to thwart it. Now, if you're interested in this approach, reach out to me. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. We do 5 videos a week, fully transparent, let you know what we're doing. You need to speak to us, just reach out, and we'd be glad to talk to you. Very customer focused here at Revere. And with that, I'm going to wrap up the week ending April 21st. Don Vandenbord remind you, it's not how much you make in the markets, it's how much of that you can keep. Thanks for listening and have a great weekend.